Let me say that again. When companies IPO, it is often, not often, it is mostly to provide liquidity. IPOs happen so that early investors make money. So bankers, right, investment bankers are incentivized to hype it up, tell a story, and early investors have a 6-month lockup. They can't sell their shares until 6 months after the IPO. So it is kind of in their best interest to pump it, hype it, and 6 months, people get out. And so with Figma, it is valued off of ARR. That is not sustainable because I feel like in today's world, right, like the technology, like what they've built, all the money they spent on what they built and all the people that they had to use to build it, all that can be replicated now very quickly. So what does Figma really have? It's the brand. It's a lot, a lot of people, and I just saw here like Sophie, like you've used it. I think I've used it. I'm not a designer, but I've given feedback on Figma. But like all that can be disrupted. And if you're optimizing the company, because when you're a public company, you have to present during the IPO roadshow what metrics matter, what metrics for Wall Street analysts to focus on, and they're using traditional metrics. And like I just feel like there's so many companies that are going to be like Figma, and there may be a reckoning that's going to happen, and they all sell off because people realize that's no longer the most relevant metric. Like profitability is important, but also there's one metric that people are starting to care about. It's revenue per headcount. It's okay, you have a lot of, how many employees do you have? And how much revenue are they driving? Every single one of them. Like that's the new metric.